Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq, coming to you live from Consensus in Austin, Texas. And joining me for this segment, we have Jess Houlgrave, CEO of WalletConnect. We're here to discuss why Web3 infrastructure development is critical to achieving the next wave of crypto growth. Jess, it's great to have you with us. Welcome to TradeTalks.
Thanks so much for having me.
You got it. Let's talk about some of the key user experience innovations that Web3 builders should focus on to deliver an anxiety-free crypto experience.
This is so true, right? So I think that one of the issues that we've had as Web3 is we've been building for geeks like me who are excited about crypto. And actually what we need to do is hold ourselves to a much higher standard, the standard that we're all used to in Web2 user experiences. This provides security, clarity over the actions that we're taking, not the ability to store our own seed phrases written in a piece of paper underneath our bed. And so what we're beginning to see in this wave is real innovation in that regard. One of the things that we do at WalletConnect is work with partners, with wallets and apps across the industry to do this, meaning that it's safer, more secure, and much more intuitive also. No needing to understand the technology just in order to be able to use it.
You know, it's so interesting. This is our first year at Consensus where we're hearing that theme more consistently about focusing on the user experience so that it's familiar. We don't care how it gets done as long as, let the engineers and developers worry about that, but let's make the experience feel comfortable and so that you can continue with more adoption. So explain to us more how wallets and dApps can improve security and strengthen user protection.
So I think there are a few things that we can do. Firstly is looking at the transaction itself that might take place on chain. There are now a number of tools called transaction simulations that basically mimic the on-chain transaction that a user is about to take and show them the result of this. This means that phishing attacks where wallets just get drained because people don't know the transaction that they're signing, we can start to eliminate. We can also eliminate things like an actor pretending to be an application that it's not. This we do through domain verification, for example. And then finally, I think this is all about also the wallet experience itself, right? Everybody is scared of losing their seed phrase because you lose your funds if you lose your keys. And now we have things like pass keys, we have recovery methodologies, we have embedded wallets that use emails as signers. So we have a lot more optionality now in terms of the types of wallets that people can choose for different actions that give them that comfort and help protect their assets.
Let's talk about Web3 infrastructure overall. Why is that critical in terms of continuing more, whether it's institutional retail adoption, to really build out the ecosystem?
So I think that in the last few years we've seen a ton of work at the core infrastructure level, right? We have blockchains that are now scalable, really fast, really cheap to build things on. And we've been waiting for that for quite some time. But now it's here. And so what we can start to do is have application developers build things that real people are going to find useful. It's no longer fun games, but it's actually building real games, building marketplaces, building payment solutions. And if we're going to deliver that to the billions of people out there, not just the crypto natives, we need to make it really intuitive, right? Because everybody is used to this standard of UX that we have. And I think that's what's driving this big push to usability and user experience right now, is because almost everything is there ready with crypto now. And it's this final piece for me that is really stopping wider adoption.
And that's what you focus on at WalletConnect, is the interoperability. And that's what's key, because these blockchains aren't communicating with each other. It doesn't solve anything.
Correct.
Right.
And I think what is really important is that we want users to have choice, right? We want end users to be able to choose the type of wallet that they want. It shouldn't just be one predominant wallet within the market. That doesn't solve the end user need. We want application developers to be able to choose which chains that they're building on. But ultimately, the user shouldn't worry about any of this.
Right.
They shouldn't worry about whether it's on Solana or any other chain. They shouldn't worry about which kind of wallet they have. All they want to do is to get value from what they're doing, whether that's fun playing a game, lower cost payments, whatever these things are. And so it's this interoperability and the ability to give that choice to end users and composability for developers.
Right, it's almost like when you think about it from a TradFi perspective, I could have Bank of America, I could have Chase, I don't care how they transfer money to each other, as long as it gets there. That's the experience that you're looking to get through DeFi as well, something that's familiar to the end user.
Yeah.
So it's been a great run for the space, and you can tell here at Consensus and other conferences where it's very capital markets focused. It feels like we've kind of gotten over that hump, to your point, where it's not just about gaming and memes and NFTs and so forth. What's next for the Web3 space?
So I think this year we've seen some really great tailwinds, obviously on the regulatory front, the ETF approvals, and this is driving things forward. The other thing that we're starting to see anyway is also Web2 companies starting to build with this technology in a core way, and I think this is a key difference, because in the past we've seen big brands do PR stunts and proofs of concept and things like that that have utilized this technology. And what I'm really motivated by is actually seeing now some of these companies build Web3 technology into their core product offering and their core consumer offering. And I think the cool thing about this is often it's behind the scenes. The end user doesn't know that they're using crypto. They're just getting a better experience or more value from the product because it's built on this technology. So I think a big wave that we're going to see over the coming 18 months, 24 months is more and more use cases, whether those are in payments, gaming, trading, DeFi, where end users can participate and experience these new things, but don't have to worry about this complexity.
So it's interesting that you bring that up, because the ethos around Web3 is to remove the Web2 intermediaries that essentially control the space. And it's great that they're embracing Web3 technology and they're building at the core. Is there a risk of them owning the Web3 space like they did Web2, or is it, the community around Web3 is really protective of that ethos?
So I think that there's a big difference between some Web2 organizations who are building on public chains because they recognize the security and all the networking effects that they get by participating in these open networks, and I think that that's really positive. It doesn't mean that they can't make money and do all of these things from it, but it means that they benefit from the interoperability and they can access this user group and provide different experiences to their end users. It makes me a little sad to see some of the Web2 institutions build these like very closed ecosystems where they're kind of taking blockchain technology and building it in a closed ecosystem. In some ways there's maybe nothing wrong with that because it can drive a lot of efficiency gains, right? And ultimately this is just a technology and you can use it in many different ways. But what I'm really inspired by is brands who actually say, I'm going to participate in this open internet and I can build new things because it's open. I can participate in the network effects that gives me. And it doesn't necessarily mean that they lose out. And I think so what we're starting to see is this sort of combination of the two, and that's ultimately what's going to drive wider adoption.
Well, I think that's encouraging. It doesn't have to be either or. All right, Jess, appreciate the insight. Thanks for joining us on Trade Talks.
Thank you.
And thanks for joining me from Consensus. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.